What is up, everybody? Dylan Space Cadet Crypto here, and today we have a lot of big news. We do have Shibaswap finally being up and ready to go. So we're gonna go over all the stuff around Shibaswap, what dig, fetch, bury, swap, the bone folder, everything, what it all means, and what does it mean for the price. So we're gonna take a look at the price as well. But if this all interests you, don't forget to click the like button, subscribe to the channel, and turn on bell notifications because we're gonna be covering this stuff every single day here. So make sure to be looking out for my new videos, and we're also going to be doing some live streams as well if you want to ask me any sort of questions on trading in particular. But let's jump right in. Okay, so let's go into the crypto fear and greed index for right now. We do see that it is at 20. It was at 29 yesterday, so we were in some fear, but now we dropped down to some extreme fear, and that is because Bitcoin did fail to break out of its descending channel. We're going to be going over that also when we look at the price of Shiba, but we have gone back down, so we're just kind of hovering between support and resistance for around that $34,000 range. And if it holds, then we can see a potential upside to that $42,000 limit for Bitcoin until its next resistance. But right now, we are still kind of holding on and just trading a little bit sideways for today. But we do see that the traditional markets have opened after 4th of July, so that also played a role in it as well. But we do see that we're at around 20, which is not too bad. It's still extreme fear, but we've been around this 20 to 30 range for fear and greed index. But let's also look at Shiba right now. Okay, so if we look at the cryptocurrency market cap right now, the total market cap is at right now 1.44 trillion. It is up 1.52% today. And if we scroll down here, we do see that Shiba Inu is in 29th place. It is trading currently around 0.00008682, up 3% today, and its market cap is around 3 billion. So let's jump into Shibaswap and see what exactly is going on, because we did see a nice update that happened for the Shibaswap, and everybody that was saying about FUD, and they're all pretty quiet right now. So let's take a look at Shibaswap. Okay, so we're on the Shiba token website here, and we did cover this update to the Shiba website. It did have some nice new updates with the graphics and just how it's laid out. We do have, it's now a little bit more organized, and it does look more professional than it did before. And we also had an updated Wolfpaper 2.0, which is just the outline, the general basis of the token and what it actually does, what does it do, and how it actually achieves that. And so they updated their paper because they did add the Shibaswap. So it is looking like there's going to be more stuff coming to Shibaswap, as well as they continue to work on and fix any potential bugs that come out. But we do see here that there is a button right here, use Shibaswap. And once you click on that, it does take you to the Shibaswap website. And we do see it's a separate one. And we do see that there's a bunch of different things that you can click on. So we have dig right here, which is basically providing liquidity to the Shibaswap exchange in order to receive rewards and interest, and they put this as bone. They also have fetch, which is you can migrate your Uniswap version to liquidity pool or your other liquidity pool tokens to earn bone. And then for the first 2 weeks, they are giving you an extra bonus of bone tokens if you migrate your liquidity pool over here to Shibaswap. And then we have bury. It says Shibas love to bury what they find, and Shiba bury basically is staking. So if you want to stake your tokens, if you don't want to get involved with a liquidity pool and the increased risk that comes with providing liquidity through a liquidity pool, then you can just stake your tokens. So it's a little bit safer, but you do get less rewards or less gains over time than if you were to provide liquidity through a liquidity pool. And we'll go over those terms if you are still a little bit fuzzy on what those two exactly mean, the difference between the two. But basically, burying is staking your tokens here, providing a proof of stake in the network. So if you believe in the network and you then you can provide your tokens, your Shiba tokens in here, and place them and stake them so you don't move them. And it provides more stability to the network, and it makes the network run smoother. And then in return, you get interest. You get paid in interest. In this case, you get paid in bone. And here you actually can see what the prices are for each one of these tokens. So they have the 3 tokens. They have the Shiba token, they have the leash token or the Doge killer, and then they have Bone, which is their specific token for giving these rewards out for providing liquidity or for staking your tokens, your SHIB tokens, or leash. Swap, so tell your Shiba Inu to fetch new tokens. So this is where you can swap your tokens for other tokens. And if we just click here, you can swap from any different kind of cryptocurrency that they list right here. So all these different kinds of cryptocurrencies, you can even select a token by searching for the name. So we can go maybe from Shiba, right? Shiba Inu, and you want to swap it to, let's say you want to swap it back into ETH or USDC, right? You have the platform here in order to connect your wallet and then transfer and swap from either Shiba to USDC or any other like Aave back to Shiba, right? So it's also really cool because you can also do that when you connect your wallet. You can swap and stuff through your wallet. And then we have here Bonefolio, which is every Shiba Inu needs to check their stash. So check your Dogalytics. So this is coming soon, but we do have here fetching, burying, digging, and the swap. And then we also have here Wolf, your return. So stake in the Shibaswap liquidity pool and claim return. So you can also farm tokens as well. So yeah, so let's go into each one and just kind of see what they actually entail and what they mean and what you can do if you are a Shiba holder as well. So let's go start with dig first, providing liquidity through liquidity pools. Let's see what that actually does. So it says liquidity providers earns returns on trades proportional to their share of the pool. So the more you provide for the liquidity pool, the more returns you're going to get, the more Bone you're going to earn. And right now, Bone is actually trading at around $17, but this morning I checked, it was around $21. So it just depends on the amount of liquidity that's in Shibaswap, and also if people are trading a lot, you get more returns. So, and it says returns are added to the pool, accrue in real time, and can be claimed by withdrawing your liquidity. But there should also be some caveats with that. If you do withdraw your liquidity, you're obviously not getting paid as much as returns because the amount that you provide to the pool gets diminished and your returns also diminish as well. So if you want to have more returns, then you want to stake more or provide more liquidity by putting your money into this liquidity pool. So you can add liquidity here, or you can create a pair, connect to a wallet to view your liquidity, and don't see a pool you joined, import it. So if you add liquidity, so it says here, get bones in our liquidity pool. And if we click on the fine print here, it says in order to claim your dig returns, right? So the interest you get from providing liquidity into a liquidity pool, you must first deposit your Shibaswap liquidity provider tokens into the allocated pair box at Wolf. And then once these tokens are deposited, returns are accrued in real time. Remember, you claim 33% of your Wolf returns weekly, but the remaining 67% will be time locked for 6 months. And the way that you actually make money off of liquidity pools is once people start using Shibaswap and exchanging tokens, moving around liquidity, what happens is if your liquidity pool, if you're staking a liquidity pool, then you're going to be earning interest based on those transactions. So every time there's a transaction, you gain a little bit of those returns, but obviously it's all split up with everybody that's in the liquidity pool. But that's how you make money. That's how liquidity pools make money. So they're on a decentralized exchange, and you're going to see it. It's called a DEX. That's just the shortened term for decentralized exchange, a DEX. But that's how you make money. And let's also just take a closer look at that as well. Okay, so just to get a little bit more in depth with liquidity pools, it is exactly what it says right here. So instead, when you provide liquidity to a decentralized exchange or protocol, you provide your assets such as Ether, or in this case, Shiba tokens. So when a user of the protocol wants to exchange their USDC for either Ether or any other token or coin that's on the Shibaswap, there will be enough of the quota asset available for the trade. And that's where you come in. You provide that liquidity because once someone wants to exchange, then they actually have the funds to exchange because they're using your liquidity that you provided in the pool. And liquidity basically just means your assets. So any assets that are easily sellable, tradable, movable, that's liquidity. Think of it as liquid, right? So if your assets are frozen, they can't be moved. But the more liquid they are, the easier they are to move. Like let's say you have a house, it may not be necessarily a very liquid asset because you're going to have to go on the market and then sell it, and that could take some time. So your assets are not as movable as, let's say, having your crypto on an exchange that you can easily just trade or sell or move around. Very, very movable, very liquid. So you're providing your liquidity here for other people to exchange their tokens for and swap them out, and that liquidity is provided by you. So it's available for the trade, and then the user making the trade will pay a fee, and that fee that they pay for using your liquidity, that's the returns you're getting. So that's the bone that you're going to be making. So we'll pay a fee to the protocol, part of which you will receive for providing your assets. So that's why liquidity pools gain a lot of returns in the long run, is because they're the ones providing the liquidity. They're like the market maker, basically providing the money so people can exchange around, and then you're collecting fees off of that. All right. All right, and then this is just a little more in depth on how they actually make the money. And so how do liquidity providers make money? So liquidity providers commonly make money in two ways. Liquidity providers earn fees from the transactions on the DeFi platform they provide liquidity on, like Shibaswap. So they provide you with Bone, right, in return. The transaction fees are distributed proportionally to all liquidity providers, meaning that if you put in a large amount into the liquidity pool, you're going to be getting a large amount of those interest and fees given to you, right, in the form of rewards. And if you have a much smaller stake in the liquidity pool, then you're going to be getting less. So it's proportional to what you put in, proportionality to all the liquidity providers in the pool. So the more assets that you, the more assets that you stake, the more fees you'll earn. Some pools also offer rewards for certain liquidity pools as an incentive to stake your cryptocurrency. These rewards are typically paid in ERC20 tokens used on the platform, like Bone. So that's what they're talking about. So if you're bullish on the Ethereum token that the protocol uses, the pools may be a good choice for you, right? So in this case, they're talking about Ethereum, but in our case about Shibaswap, it will be the Shiba token. So that is an in-depth look on what DIG is here, providing liquidity to these Shibaswap liquidity pools. So putting in your money in the form of crypto and using it so people can exchange different tokens, and then you accept those fees as returns. Okay, now let's take a look at burying your tokens, or basically staking your tokens, because there are a little bit of some similarities between staking and providing liquidity. Both require tokens, but at the same time, they are a little bit of difference between those two. So let's just click on that real quick. So it says Shibas love to bury what they find. Read more about burying tokens. So Shibaswap allows you to stake your tokens to earn wolf returns proportionally to your contribution to the pool. When you stake Shib, Leash, or Bone, you will receive Shib, Leash, or T-Bone. So they're just slightly different. These tokens represent your share of the pool, and wolf returns are distributed weekly. Disclaimer: maximize returns by leaving your tokens staked. The longer your tokens are in the pool, the more returns you will receive. Whereas frequently staking and unstaking will lower your long-term gains, and there's a mechanism to ensure a fair return distribution among the holders that function independently for X Shib, X Leash, and T-Bone. Remember, you can claim 33% of your wolf returns weekly, but the remaining 67% will be time locked for 6 months. So in this case, if you accrue any of these three tokens, Shib, Leash, or Bone, you're going to be receiving this for staking. All right. And then let's take a look at what actually staking is. Okay, so this, I'll put this in the link down below, but this is the website that kind of just explains the difference between liquidity and staking and which one is better. I'll put that in the description down below if you want to take an in-depth look at it. But this one, I just think it kind of sums up very well. But it's saying providing security, and you get rewarded for providing security. Now, what does providing security actually mean? So, like I said before, when you're staking, you are believing in that ecosystem in the Shibaswap when you stake your Shiba tokens. And it says here, the second element of DeFi to be explained is staking. Staking is how proof of stake blockchains such as Ethereum achieve consensus. When compared to its other brother of mechanism work, proof of work, which is what Bitcoin is, staking is far less power hungry. Because Bitcoin they need Bitcoin miners in order to get the Bitcoin out, and it uses energy, not a lot of energy, obviously, compared to like diamond mining or anything, but it does use a fair amount of energy. And proof of stake works differently by providing a different way for the blockchain to actually work. And the blockchain is just in Ethereum is proof of stake. So it says when you stake your tokens right here, when you stake your tokens, you are effectively locking them in for a set amount of time as a means of providing the network's worth. All right, this turns you into a validator. So instead of proof of work, where the miners, are the validators, the computers are the validators, you are the validator by providing your liquidity, by providing the Shiba token. In other words, your interest in the network security is represented by your stake and how much you're putting in. And since staking often requires more technical know-how than just buying and holding a given currency, many investors prefer to give their staking responsibility to a pool. So that's when they join a liquidity pool. These pools use the tokens provided by the investors to stake in a given network as a lump sum, and the rewards are paid out in proportion to the size of each stake in the pool. The public blockchain Tezos has a similar feature built right into the protocol. Anyone who does not want to be a validator but wants to generate returns from staking can delegate their stake to another validator who takes a cut of the profits. And let's also just read this, because this is also, if you're on the fence of which one you should do, if you should provide liquidity through a liquidity pool, or if you should just stake and earn those T-bone rewards, X SHIB, X leash, all that stuff. It says which is better. So depending on this, depends entirely on your proclivity for a risky crypto portfolio. Staking is intended for medium to long-term investments, while the tokens are locked up for a set amount of time, and validators that behave badly are punished with slash returns. That's for staking. However, this also means that the average return on the investment In contrast, liquidity mining, the liquidity pools, and yield farming have enormous risks. So, which also explains the sometimes astronomical returns. So, if you want more gains, right? If you want more gains, that also comes with more risk involved, and that's going to be your liquidity pools. But if you want minimum risk, if you're going to be holding for a medium to long term period of time, then staking could be the right choice for you. I also stake some Cardano in my wallet, in my Exodus wallet, and so I do get rewards on that, because I'm not going to be selling my Cardano anytime soon. It's very low risk, and I do get a percentage of APY back. Granted, it's not very high. I think it's only like 15%, but it's just there because I'm going to be holding it there, so might as well get some rewards from it, right? Some percentage of interest on it. But with liquidity pool, as you can see here, at the time of writing, providing cake tokens to PancakeSwap protocol carries a APY yearly of 103%. I'm pretty sure this is 103%. If not, it could be like even more than that, but yeah, like around 103%. So you're making a lot of returns here when you're providing a liquidity pool. But that's kind of the main difference between these two components to a DeFi, a decentralized exchange, which is what Shibaswap is currently offering. So Shibas love to bury what defines. So here the APY is coming very soon, but you can buy or bury each one of these three tokens, right? Bone, Leash, and SHIB. All right, let's take a quick look at the price of Shiba, just because this video is getting really long and I don't want to get too in depth with this stuff. I want to be making another video, so be on the lookout for that. But let's just take a look at the price action right now, because we do see that we have been in this descending channel, like how Bitcoin was. But in this case, we actually did break out. And now we are creating some sort of a small M pattern, but we'll just have to wait and see what actually happens. But you can see this one top, two top right there. And then we could see our potential price target for that double top is the top right here to the bottom. And the breakdown here from the neckline, which would be right here at around 8, right? That 5 zeros and the 8 at the end, coming back down here to this blue box. So this could potentially actually be a price target here for the Shiba token, as well as we could see this actual pattern playing out here. So we do have a descending resistance and a ascending support, and we have been bouncing in between these two levels, and we could potentially come back up here if we start trading below this area, come back up here and retest this area at around 9, at around $0.00009, and that could potentially happen as well. Let's just take a look at our moving averages. But so far we've been just bouncing in between these two blue boxes and trading within this range. This is the 6-hour chart, by the way, so we are having really massive wicks to the upside and the downside, and this has to do with the Shibaswap being released right here, right? So we do have a lot of people selling and buying, so we have just huge wicks to the upside, but we're still maintaining the trading range between that 9 and that 8 level. So the past week, we've just been trading within these ranges, so it's just pretty insane to see. And if we look at our moving averages as well, we do see that we are struggling between the 21 and the 50 right here. We're struggling to hold the 50 at this moment, but let's move on a lower time frame. Yeah, like these wicks are just crazy. That's just the volatility because of the Shibaswap coming out, people staking, people providing liquidity, people selling, trading. Everything has been more volatile. You can see because we have big volume candles of selling pressure right here. Every time it reaches this level at around 9 or 10, we get a lot of people selling because they know that there's a lot of resistance up ahead right here in that between the 9 to 10 area. But right now we are just trading above. We're trading within these two levels right here. If we start hitting this more, because we have been touching this upper side a little bit more than the downside, this lower part of resistance or support, so that could indicate that we are going to be trading a little bit higher, at least to this blue box level where I drew here at around 10. So that could be very exciting here too. So if you don't want to miss out on that, remember, make sure to like and subscribe because I'm going to be updating my channel on the Shiba token and any other altcoin if you're interested. I do stocks as well and crypto trading in general. So we are seeing a lot of volatility, a lot of volume come in because of Shibaswap, but we do see that it could potentially be a double top right here, and we could be trading down lower to this blue box. Like I said before, like we've been trading for such a long time right here, using it as support right here as well. So all just depends on Bitcoin's price as of right now, because we are still stagnant, but this is starting to look like a double top to me. So expect it to come back down here and then come back up here, so we can finally break through this 0.00001 resistance that we've been waiting for so long. But that is it for this video. Thank you so much for tuning in here and listening to this. That is it for me. Peace out.